Hello, welcome to Strictly Money. I'm Saijal Patel. With inflation at a 40-year high and stock markets declining, many retirees are increasingly worried about the impact the current economic environment will have on their standard of living. Because not only are higher prices eroding their purchasing power, their savings are depleting at a faster rate. And let's face it, for most seniors, returning back to the workforce is just not an option. Joining me now to discuss how to overcome inflation and longevity risk is Fraser Stark. He's the president of the Longevity Retirement Platform at Purpose Investments, and he joins me now. Hi, Fraser. Great to have you back on.
Yeah, hi, Saijal. Great to be back on the show.
You know, Fraser, I was reading a recent stat or a statistic that some 77% of Canadians between ages 55 and 69 are worried about their financial health. And most don't think that the current government retirement benefits, things like, CPP, OAS, are providing enough income for them. Probably doesn't surprise you.
It doesn't surprise me at all. I think inflation is the concept on everyone's lips these days. And if you think about the impact it has on a retired person, it's very different than on someone who's still working. So someone who's still working, much of the impact of inflation is offset by wage inflation. Not in perfect connection, but wages tend to move up in inflationary environments. But if your working years are behind you, you're living off your assets. And especially in the current environment where inflation is up significantly, and yet markets and portfolios are down, it's a really tough combination. It erodes people's purchasing power, as you said, quite significantly. So it's a very unique challenge for people in retirement.
Fraser, do you think that they should be worried about inflation? I mean, I guess it depends on your thoughts on how long inflation will stay, or whether this is permanently baked in. And I know it's in our faces, but do you think that's where they should be really focusing on, or do you think that there's longer term structural issues that they need to be thinking about?
Yeah, I think people do need to think about inflation a lot, and it's always hard to predict how long it's going to last for, right? The current inflation is being driven by supply chain issues, as we're all well aware, and when those will be remedied is not clear. They're driven by industrial effects coming out of China, the conflict between Russia and Ukraine causing food prices and energy prices to rise. So it's really hard to know when this is going to correct. And so for a retiree who's perhaps in their 60s or 70s, they have an uncertain amount of time remaining they need their assets to last for. And the combination, layering all of these uncertainties on top of each other, there's market uncertainty, there's uncertainty about their own lifespan and their health and spending needs associated with that. And now to layer on this idea that we don't know if inflation is going to stay around 8% or slowly start to revert back to a more typical 2 or 3%, it creates a lot of worry. And as we know, worry can be paralyzing to people. And unfortunately, what a lot of people do is they don't spend and they don't live their retirement dreams the way we hope they would.
No, yeah, absolutely. And what's really interesting, though, Fraser, is that previously a lot of retirees have been forced into the stock market. I mean, we've seen this just to try to earn a decent return because they were getting nothing in bonds or GICs. With interest rates starting to go up, do you feel like there's a bit of a bright spot, like where we could see a little bit of balance?
Yeah, it's certainly helpful that the risk-free rate, the yields essentially have risen, right? It gives people an opportunity to generate income without taking risk. And I think that's helpful as a portion of someone's retirement strategy. When rates were so low, you effectively couldn't generate much return without taking on risk. And so a lot of people shifted away from the traditional 60-40 or whatever their portfolio allocation was. And they were rewarded for it over the last period of time, with markets rising as quickly as they were. But as they correct, it becomes challenging. So I think we will see people moving back into some of those more either guaranteed or just low risk investments.
Do you have a sense, Fraser, of how pension funds are doing now with rates going up?
Well, it's certainly helpful. I don't have firsthand information about the funding levels at pension funds, but I think the higher rate environment is likely helpful to their situation for sure.
Okay.
But of course, with the current fixed income portfolios that they have, they've taken a hit. Depending on the duration of those investments, they've certainly taken a hit recently. So forward looking, it's a good picture, but the present, it can be more challenged.
Yeah, we only have about 20 seconds left. I want to get your thoughts on annuities. Are they coming back?
Well, the rates are
popularity?
certainly rising a little bit. Annuities have always made sense as a great way to address longevity risk, and we can talk about that more in a moment. They still have their structural issues though, and the lack of redeemability makes them unattractive. And because they're guaranteed, they won't go down. They also won't go up. So as an inflation hedge, they're not a very good vehicle.
Welcome back. Fraser, we were talking about annuities before the break. Given that rates are coming up, do you think there's a better case for them now?
There is. I mean, certainly someone who's seeking income in retirement and looking for that assurance that they won't outspend their retirement savings and that will last as long as they do. Annuities are a powerful vehicle to do that. There are, of course, trade-offs with everything. And so the trade-off for that guaranteed income for the rest of your life is that it won't go down, but it also won't go up. And so tying it back to inflation, it's a challenging environment where an annuity can only be a part of a strategy, and in fact, it's not going to be part of everyone's portfolio. Many people turn away from annuities because of the irrevocability of it. You are losing access to those assets, and there's no guarantee that if you pass away on the earlier side, your estate will even be made whole for the investment that you've made. So annuities are powerful, but have trade-offs that not everyone appreciates.
Yeah. Well, let's talk about the fund that you guys launched at Purpose. I mean, last year around this time, you launched the Longevity Pension Fund, and you came on the show in November to talk about it. How has it done, and what learnings, I guess, have you and the team taken away from it?
Yeah, that's great. Thanks for asking about that. Just as a recap, the fund is the first income for life mutual fund anywhere in the world, not just in Canada. So a truly made in Canada innovation here. It will pay income as long as each investor is alive. And so in many respects, it acts like a defined benefit pension plan or an annuity. And there's a redeemability to it. So at any time, an investor can choose to redeem their units for the lesser of the current fund value, its NAV, or unpaid capital, which is the amount they put in less the cumulative distributions received. The fund is doing phenomenally well, and I think markets have taken a real turn since I came on the show back in November, and I think it's highlighted the power of the fund's approach to portfolio construction, and so that highly diversified, both in terms of global diversification as well as asset classes, the use of a hedging strategy to ensure that when markets do correct, there's protection there, and that the fund doesn't decline as much as the markets at large. And so the fund has done incredibly well. I mean, we've made a lot of progress working with dealers to put it on the platform. The fund is now available to many Canadians in defined contribution pension plans, which is really powerful. So it's helping people accumulate for retirement, knowing that they now have income for life once they turn 65.
Yeah, I think we have an asset allocation chart that we can bring up to show the breakdown of it. Have you had to make changes to this?
No major changes, because we set out deliberately with a very conservative approach. The objective of the fund is to generate modest returns with minimal volatility. And so, we didn't know that this market shift was coming, but it was certainly a possibility. And markets have corrected quite significantly over the past 2 or 3 months. And the fund has performed extremely well. So, a slice of the fund is in alternative assets, real assets like real estate, precious metals, base metals like copper and steel, energy, and agricultural commodities. And that portion of the fund has lifted through this new inflationary period and performed the exact role that it was put there to create. And so if we look at the fund, we're approaching the fund's first anniversary next week. And since inception, the fund is only down 2.4% in an environment where a lot of our peer funds that are designed to provide income for people in retirement are down significantly more than that. And I think everyone's aware of the impact on both fixed income funds as well as equity funds. So we're very pleased with how the fund has performed given the challenging market environment around us.
So for someone who's interested in looking at this and think, okay, I can either go the mutual fund route, or I can go the annuity route, or I can look at this fund. What are some of the considerations? What are the pros? We got about a minute till the break.
Yeah. I think I've touched on annuities a moment ago. So the trade-offs there, that idea of guaranteed income and longevity risk pooling. What the longevity pension fund allows an investor to do is to have that longevity risk protection so that even if they turn out to be someone who lives longer than expected, they won't run out of funds. And yet they're still benefiting from being in the market, which over the long term, we know generates higher returns than taking safer investments that are guaranteed. And so it really is that hybrid between the two in a mutual fund structure. And ultimately, what it allows someone to do is spend more of the allocation they put into this fund. They're able to spend more each year, which is really powerful for many people.
Okay. And then we'll talk a little bit about the distributions because I want you to explain that. But we're going to take a quick break and then we'll continue this conversation. We'll be right back.